Earnings alert on Lennar. Shares higher after a beat on the top and the bottom lines. Home delivery is also up 9% from a year ago. Let's go inside the numbers with Diana Olick. Diana.
Well, Melissa, they beat in tough market conditions, but it was really all about mortgage rates. As you said, deliveries up 9% and above guidance, while new orders were down 10%. But that's not actually that bad given the market. Though, take a look at mortgage rates during that quarter that started at the end of November. They started falling and were then decidedly down in January. That's when we saw both sales of newly built home and pending sales of existing homes jump nationally. Then came February, rates got ugly again. But Lennar's chairman, Stuart Miller, said while traffic dropped in February, sales actually held. He said home buyers are considering the possibility that today's interest rate environment may be the new normal. And we've seen wide swings now in rates due to the banking stress. Rates first plunged, then came back up today on that CPI report. Experts tell me unless we see more big pain in the banking sector, rates will likely continue to rise. Melissa?
All right, Diana, thank you. Diana Olick. The conference call, of course, tomorrow morning. Guy, what do you make of Lennar?
Listen,
housing?
We've talked about home builders. We said if it's counterintuitive it is in this environment. You can be bearish in the overall market, but you have to trade these from the long side. We've been steadfast. Look at these names. They all, Toll Brothers, DHI, Pulte Homes, all made all-time highs in December of 2021. They're all within probably 8 to 12% of approaching those levels that we saw a couple of years ago, which is remarkable if you think about it. And it becomes not unlike oil. This is a supply-demand situation, and the supply is just not there for the demand. So I still stay long these names.
Yeah, Tim?
I don't chase them. And Guy's right. I mean, on the supply dynamics, and they just said this in their coming out of this earnings call. I just look at the dynamics with the consumer. Everything else that we're talking about on the show tonight doesn't bode well for the housing market. I still think velocity of housing sales continue to grind lower.
I mean, if we have rates still high and lending standards tightening, that's sort of difficult for the consumer, for a home buyer, even with the supply-demand constraints.
I mean, something's got to give. Either rates have to come down or prices have to come down on homes. But I do think it's only to a certain extent, because I think that supply and demand constraint is a lot more dramatic than people realize. There are tons of buyers just waiting to buy. So when one of those things comes down to a certain extent, you're going to see people come in. So I actually do still like the home buyers here, home builders here. But especially if we do start to see rates come down, you are seeing the expectations later in the year for that to happen. That could mean mortgage rates eventually come down, which would be a beneficiary for these.
Still in Lowe's?
Still in Lowe's, still in Home Depot. I think that Lowe's in particular is attractive to me. Priced cheaper than the market, and I think it's at least a market multiple stock.
Yeah. Would you rather?
Oh, I love this game.
It took only 50 minutes in the show to get to it. Would you rather? Builders or the home improvement retailers, Guy?
Wow. Builders or the home improvement
I mean, it looked like you were both
I'll go builders. I'll stick to my guns.
Oh,
I mean,
okay.
Karen's right in terms of valuation, but I think people underestimate, to Courtney's point, what's going on the ground in these home builders. So I'll stay with the home builders.
Yeah.
I think Home Depot, Karen's right, Lowe's is cheaper. I do like them here. I do think you have a dynamic where people are going to be investing in their homes. I do also think that the investments they've made, technology, they're pro-business, that's margin friendly. I think they can be a little more resilient here. So you're buying weakness. I'm not sure you're chasing any of these things right now, and even the home builders, because I mean, Lennar's gone from 65 to 100. But I am buying weakness in Home Depot.